Okay, it's Tuesday, the 8th of August, and we are on the FTSE 100. I've just entered into a long position after this, 12:35 a.m. pin bar right here. Okay, so there's a few things to go over with the market today. Now, the first thing is we are in August. In the Sunday analysis videos, just before the start of August, I went over how we can see very, very quiet, very, very range-bound markets. Now, if we just quickly scroll back to yesterday on the FTSE, you can see exactly what it is that I am talking about. So the market was within basically between an 18 and a 20 point range for the entire day. Now, this morning, we are now at 10 to 1. So ATM candle, we opened here, and we were basically within a 15 point range all the way up until midday, where we've just broken up and we've just reached a 20 point range. So the market is moving very, very sluggishly. So the first thing is, when trading in August, you want to be careful, especially as a beginner. If I had to choose a month where I would think that beginners are most likely to get wiped out, I would say it would be August. When you have a quiet August like this, and it's quiet just, it's for the exact same reason that lots of other businesses lose members of staff. They go on holiday in the summer, and traders are no different. And if traders are not trading, the markets get quiet. Now, because it's quiet, it's easy to read false signals. It's easy to get chopped in and out of trades. If a market is just going sideways like this in a very, very tight range, it's easy to get into long positions and then short positions and then long positions, looking for these larger moves. And all that's happening is you're getting stopped out and stopped out and stopped out over and over and over again, which is building your frustration, which is making it even worse. So when in August, only if it's like this, last couple of years we haven't really seen quiet Augusts. But I just come to the trading day, I look at the open, I look to see how the market starts to react. If you have a very small opening candle at ATM, and then if the market is creating lots of pins like this, it's giving you the clue that potentially it's going to be a quiet day. On days like that, I'm just more cautious. I'm more inclined to get out of a trade that doesn't look quite right. And I'm more inclined to also skip setups that don't look quite right. So for today thus far, we pressed up, broke up above this zone right here. And then we failed instantly and broke back down below. We then pressed up. We got a sell pin bar. Now, coming into this market this morning, my analysis was bullish. Really, I'm still expecting the FTSE to at least attempt to get up toward this 7545 level. However, after we broke up above this level and failed instantly, it was potentially a false break. We then pressed up, got the sell signal. Management point for me was down at these previous lows. So it's against the analysis, overall analysis. However, it's what the market was telling me this morning. It's a little bit close, but I was happy to get into the short position. It came down, started to show a little bit of rejection here. And basically when it started to press up, I just exited the position for not a full position loss because I was managing it a lot more tightly. Now we've then broken up above. We've came down. We did produce an engulfing candle here. However, for me, it was just trading into this whole section right here of previous highs. Right here. Just wasn't happy to get into that one. We then came up. We broke just up above the 7534. We came all the way back down again, held at this level and produced a bullish pin bar. Okay, so what am I looking for from this trade? Well, as I've mentioned, first of all, I am being more cautious. Really, I'm looking for at least a retest of this zone of resistance here. More than likely, I'll look to hold the trade for a retest of the previous highs. If we do get up into those levels, really this whole section here, I will consider taking partial profits and then looking to run the remainder up to that 7545 level. Now that is looking at certainly 1 and 2 resistance levels in the way. However, as I've mentioned, the overall analysis on the market is still bullish for me and looking for that move up towards 7545. So I am relatively happy to trade it in that manner. Obviously, I'll be watching to see how it reacts if it does come back up at these levels. And then what I will do also, as always, when the trade completes one way or the other, I will go on to the higher time frame and I'll take you through why I was bullish, what I was looking at on that daily time frame, and why I was happy to get into the trade. Okay, so the market has pressed up into that first target. I am closing out 75% of the trade, locking in profits. And then all I'm going to do now is set a limit order up toward around about 7544 and just let the trade run and see if we get up there before the end of the day. And then what I am going to do is at the end of the day, I'll come back. As I've mentioned, I will take you through the overall analysis on the daily time frame. And because it is August and I've mentioned that the market can be relatively choppy, I'm going to also take you through quite a lot of stuff from the 5-minute time frame and show you how relatively easy it is for beginners to get chopped up in this market. Okay guys, so we're just at 4:05. That trade has now completed. You can see the market made a nice rally up into that zone up above, which was the analysis from this morning. And yesterday, actually, what I went over with subscribers was I was looking for that move up into at least 7545. I'm going to go over that on the daily time frame. But first of all, I'm going to go over quickly why it is so easy to get chopped up when you get sideways ranging, tight ranging price action like this in August. So, came down, we had this potential sell position. First of all, as I mentioned, I took a small loss on this one. It came up and took me out of it didn't take me out of the trade, I exited the trade as we started to break or show bullish sentiment up above this zone. Now, it's very easy to then allow that loss to get to you. However, we're not really looking at that so much. We're not really looking at revenge trading. We're looking at this choppy price action. So let's say you come into the market. You have the exact same analysis as me, looking for that move up to 545. You then come down, the market bounces, it comes down, and you get in here exactly like I did. The market presses up, you see this sideways hesitation. Now what we're going to look at here is the first test here, the second test here, and then we press up and we start to hesitate. We then start to break down. As we get down into these levels, we start to make stronger bearish candles. Now, what is this doing? It's setting up a potential head and shoulders pattern. 1, 2, and 3. And it's trying to break down. Now, what do lots of people look at on head and shoulders patterns? They look for the break below this section right here as their entry. Strong bearish candle, breaks below those levels. It's very, very easy to then begin to panic and abandon your trading plan. Exit on this one, or as this market comes up and starts to reject, exit on this one, jump into a short position. There's an unfilled gap down here, 7511. You're looking for that move down into those levels. You've just had the head and shoulders pattern and confirmation. You start to panic because you're in that trade and it's moving into the negative. It's getting close to your stop down here. You exit and you jump into the short position. This is what happens very, very regularly in August trading. And it might not even be because of something like a head and shoulders pattern. It can just be because the market is just producing very, very choppy price action. And then you'll start to see strong candles like this. And you'll get it into your head, okay, we've had these strong candles. That's clearly telling me that the bears are in control. You'll start to abandon your plan. You'll start to suffer losses. And it starts to fall apart from there. It's really important that you, even when the market is choppy and a lot more difficult to read, or it's giving conflicting signals, you stick to your trading plan. I already had that analysis of expectation of the move up. I had that bias coming into the market. It's one of the reasons why I was happy to get out of this trade for a smaller loss. And then when it comes back down, get back into this one. Well, I should actually go over, I go over quite a few times. When I have a loss, it's just the way that I trade. If I have a loss, the next position I'm then happy to risk 2%. It's just the way I trade. There's benefits to it and there's drawbacks. On certain occasions when I have a double loss, it means I lose 3% of the account. But more often than not, the second trade tends to work out well and it at least brings me back to break even, or in this instance, well back into profit. But it's easy, or it's important that I follow my trading plan. So I read the market here at potentially a false break above this zone and then pressing back down. If it's a false break, it's potentially a sign of weakness. Now, it doesn't mean that I'm changing my overall analysis of that move up, but it means that I'm changing my short-term view on the 5-minute time frame. Now, potentially, we're going to see a move down into the unfilled gap sitting just below 7.5, we're about 7.512. And that's why I was happy to get into that as a short position. Because I'm also reading the market as well as having the overall analysis, because very often you'll have a target like this, 7.545, and it'll take days, sometimes even longer if it's a longer, further away target. It can take weeks to get there. So I'm always willing to trade in between. But the important thing is, once it started to move against me, gave me the clues that I was wrong, I was happy to get out. I didn't then panic, I just waited, got the next entry, and then you're able to get yourself back into profit. And it's all because you are not following your emotions and not panicking. Really, really important, especially in August, guys, because you are going to have choppy markets. You are going to have difficult to read markets. Now, okay, so daily time frame, really, really simple analysis. We broke up above. Well, first of all, when we broke up above this swing here, started to turn a little bit more bullish on this market. Coming into this week, as soon as I see we were above this previous swing, all I said to subscribers was, expectation now is a move up into at least 7.545 on this market. And that's what we had. We had a bullish move yesterday, sure, but it really came in today and it came up and hit those levels. Okay, guys, so that's everything for this week. As always, I hope that was helpful. I hope you've all had a good trading week so far. I'm James Orr, and thank you.